Okay. That being said, a brief agenda today. Uh, you see Covisum up on the board. That's the name of the company that produces the tax clarity software. We're going to give you probably just a couple minute overview on who we are and where you can find some additional resources that might be beneficial to you in helping you grow your business. I'll give you a quick highlight of that. We'll jump right into the software. We'll talk about the resources that you'll have access to during your free trial period, and when you become a full subscriber, what resources you'll have access to there. Probably just another few minutes as well. Then we're going to just jump right into the software, run a couple of examples, show you how to run the report, explain what the graph means. If you've got any questions on that, please feel free to ask. We'll take a look at some of the details for the tax calculation, where you can find that stuff at, and wrap up at the end and show you how to run a couple of reports. So that being said, Covisum literally means shared vision. Coming to join our shared Visum meeting vision, what we do is we create a shared vision between you and your client. We do that through software, software training, and support. And just a second, I got quite a few questions actually popping in. Okay, so is there a sample plan that we can hand out at a workshop that shows an example of what we can do for them? Absolutely. So take note of some of the inputs that I have today. If you're actually signed up for the software now in a free trial or actually purchased, I'll take down your name, I'll look you up, and I'll send you the details over as well. So just to answer one question. Um, so the next one is doing a Roth conversion. How would I calculate if they have to pay an alternative minimum tax? The software calculates AMT in here as well. So I'll show you where you can find some of those calculations when we get to it here shortly. It's great to have questions right off the bat. All right, so uh, we create a shared vision between you and your client through software training and support. We're going to offer you quite a few resources. We do have a support team here that's available to answer any questions on any of the products that we have. We're not going to get into Social Security timing or Smart Risk today, but those are two other software packages that advisors are using in the very same manner as Tax Clarity. One, to get in front of clients, and two, help their clients make the best decisions they possibly can make in retirement. Um, so if you'd like, you can come here and click a 10-day free trial. During that free trial period, you'll have access to run as many reports as you'd like, certain resources that I'll go over today, and three, our support staff. Being able to give them a call, make sure you got some questions ready, and they'll be more than happy to answer them. I'm going to show you the blog, and then I'll answer the next couple of questions. And then we're going to get right into the software. And I'm not going to answer any other questions until we get through the presentation portion of it, just to let you know. And it's great that you guys are asking questions. I love it. And then once we're done with that, we'll just run through and get them all answered at that point in time. So if you'd like some additional information on stuff that we're doing with regards to white papers, with regards to other subject matter content, come to our blog. Go to covisum.com, click on blog, and what you'll be able to do is get notifications if you'd like on posts that we have, which include white papers, upcoming webinars, all kinds of good stuff that you'd be interested in. So that being said, this is your tax clarity software. And hold on here real quick. I said I'd answer a couple of questions. One, if my compliance department wants additional disclosures on the reports, will I be able to add them? Yep, I'll show you that here in just a second. Two, thank you for the contact information. We'll get that sent over to you here shortly. And the last one, is there a bundle discount for all three programs? There absolutely is. So if you're getting all three programs, I would discount each one of those programs 20%. Feel free to just give me a call directly. I'll make sure that you get a coupon code, and we'll get that taken care of for you. And for that person, if you want, you can send some contact information via this question, and I can give you a call back as well. All right, so we'll jump right into the settings. So this is the settings page for the person that was asking about the disclosures. Here's where you can put your custom disclosures on the report. We're going to run two different types of reports today, so I'll be able to show you where these show up on the two different types of reports that we've got moving forward. Also, you're going to be able to put your logo on the front of the hard copy of the consumer report if you'd like as well. Now, during the free trial, you'll have access to the training videos. So depending on your knowledge of taxation, you might want to get a little bit more information about income basics, taxing income, marginal rates, inputs. We do have another tutorial down here that really runs through the software as well. And I'm going to focus on these two. It says prospecting with tax clarity and client service. So Joe Elsasser's the president of our company, and he has his own firm, just like just like everybody else here on the call. This is really how he uses this tax clarity program, one, to prospect, and two, in client service meetings to help his clients out. So they're about 10 minutes long. My suggestion is, as he narrates both of those videos, is to jump on there, take a look at them, and see how this is going to work for you and your business as well. Now, once you become a full subscriber, you will have access to additional resources. So we have a PowerPoint presentation that you'll have access to. We do have a consumer brochure that you can customize to you and your company. If you plan to use this tool to start to develop relationships with CPAs of clients or to approach CPAs, we have a CPA intro letter, a customizable white paper. Joe also put in a sample marketing plan. So for those of you that maybe do not do marketing for a living, but help out clients, and you want a sample marketing plan, we provide one here as well. And then we also have a retirement transitions direct mail example. Now, this is a great mail piece that Joe's been using for years here in Omaha, Nebraska, and has been doing well. And other advisors across the country have been using this to combine a lot of different seminars into a whole transition series. So if you'd like to take a look at that, a lot of advisors have found that very helpful. And then the last one is practical uses for tax clarity. So Joe runs through the presentation and talks about different uses for the software, gives a little bit of commentary there. So it's actually a really good video that we made sure we put on here as well. So that being said, we're going to run through some income basics here. One, I'm going to pick married filing jointly, and we're going to take a look at tax year 2018. Now you'll notice over the left-hand side it says Apply Tax Cuts of Jobs Act of 2017. When I've got 2017 or earlier, you'll notice that that's not checked. It's because the new tax law didn't apply for any of those years, so we only run calculations for those years based off of the tax law at that time. Now, if I do go to 2018, one, it's automatically checked, so we're going to run calculations based off of the new tax rules and give you all of the information based on new tax rules. Now, if you want to make a comparison, and we've had quite a few advisors ask for this feature, is to be able to take this off and run a report based off of the old tax law, as if the new tax law actually didn't pass. And that's one way that you can show or have a comparison. So run two different reports, one with and one without, to talk to your clients about if they have questions in that arena as well. So depending on how your clients get to you, or potential clients, if you're using this as a prospecting tool, you might want to give them a little bit of information about some of the terminology that you're going to go through with regards to taxes. And really that probably comes down to their level of knowledge as well. So you'll notice that we have married filing jointly for 2018. We have tax brackets ranging from 10% all the way up to 37%, and this is ordinary income. Prior to the tax law change, capital gains used to be presented in the same manner based on the same thresholds, but because the thresholds became decoupled, we had to break these up into two graphs. It's not a huge change. You'll notice that one of the thresholds is 77,401 versus 77,201. You think they would have just aligned those, but they did not. And the software takes that into account as well. So from $0 to $19,000, you pay 10% tax on the dollars that fall within that bracket. From 19 to 74, 12%, all the way up to the highest tax bracket of 37. I want you to keep this in mind because the first chart that we're going to take a look at, that's not going to be the case. And I'm going to explain why here in just a second. So capital gains tax bracket, so from 0 to 77, 0%. Not a lot of advisors or even clients know that there's a 0% tax bracket for capital gains, 15% and 20. Now the reason this isn't going to look like, the reason the chart that we're about to look like isn't going to look like the graph that we see up here is because we have standard deductions. In prior years, if you take a look at 2017 or earlier, we had personal exemptions as well, but that's not the case here any longer. We just have a higher standard deduction for a married filing jointly. And if they're over 65, we have another deduction as well. And then also Social Security is listed in thresholds and exemptions because Social Security is not taxed right away. It's only taxed once your provisional income breaches certain thresholds, and then it's actually brought into the tax picture at some point in time once we take a certain amount of distributions moving forward. And we're going to be able to see that graphically when we take a look at the landscape tax map. And then Medicare monthly increases we want to include as well. If you do breach certain thresholds, obviously you start to pay more for Medicare Part B and Part D, so that's included in this program as well. So let's take a look at Dan Sample. Born in 1950, married filing jointly. We're going to take a look at 2018 with the new tax law. Jane Sample, 1/2/1950 as well. You'll notice that we have our income sources here, and they all align with a line on the 1040 or a Schedule D or a Schedule A. So if you do have somebody come in, have them bring their 1040 and any schedules that they do have that might be relevant. You'll notice that we pulled out the most common distributions: earned income, IRA distributions, pensions, tax-free interest, Social Security. All of their ordinary income is actually grouped in ordinary income field, and you've got the lines here. Just add them up and place the total in. On the capital gain side, we have long-term, short-term, and qualified dividends. And if you click on the question mark, you have your Schedule D line 15. If no Schedule D, it's on line 13 of the 1040. So we try to be as helpful as possible. Now, because the standard deductions increase, the expectation is that more people are going to use the standard deduction than itemize. But if you do itemize and you do have some above the line deductions, you can put those values here. And if you have your Schedule A, you just pop this open and input the values on the Schedule A right in here, and we'll be able to move forward. If you do not fill that out, the software is just going to use the standard deduction to calculate this as well. Give me 1 second here. Okay, so I have somebody asking about the gray area and a good explanation on that. I'll run through that, and I see that you've given me some maybe helpful hints or things that we can potentially change to make that a little easier. I'll run through it. If you have additional questions, just ask for it. The one thing that we do is we want to be able to help you understand that graph as much as we possibly can. And if we need to, we can set aside some time to sit down for a one-on-one session and kind of run through that and discuss it in a little bit more detail if we need to. But just let me know. We'll make it as easy as possible. So the first one that we're going to look at today is, we'll just take a look at earned income, $80,000. Hit calculate. We're going to take a look at the tax map. Now this one does not have the gray area on it. You'll notice up at the top it says rate on the next dollar of ordinary income. That's what we're looking at. So we have ordinary income down here at the bottom, so from $0 to $150,000, and what dollars we'd pay taxes on. So if I touch here on the graph at $104,000 at 12%, if I jump up here, 104.5, it's 22.5. So these are in increments, obviously, and you'll have the ability to get down to the nearest dollar if you need to as well. Over here is the effective marginal tax rate. You'll notice that the effective marginal tax rate represents the tax brackets, and it's not exactly the same as what's on the graph. You'll notice we don't have a section from $0 to roughly $19,000 where we're paying 10%. That's because we have that standard deduction, which essentially pushes the tax brackets back. So our 10% or 10% bracket starts right here, and then we move up to the 12% and 22. If we were to add additional income that needs to go past this point in time, the graph will expand if we needed to as well. I'm going to get rid of the regular tax brackets, and you're going to see the gray area, right? Because we just have earned income. The effective marginal rate of this gray area really mirrors our regular tax brackets. It starts to get a little bit wonkier when we add in things like Social Security that isn't necessarily taxed, and we put ourselves in situations where maybe long-term capital gains are being pushed out of this 0% bracket and into the 15% bracket. So I'll show you how all of that works. One, ordinary income. These are our levers that we're going to use on this chart. Earned income, ordinary income, IRA distributions, and pensions. If we need to get more advanced, we can click on the advanced button. We can see them all on the ordinary income page if we'd like. But most often, these are the fields that we're going to change in order to show scenarios for our client. So before I actually make a change, I'm going to click on the details. And down here is really where you can tell where that gray area works. Now you can't see it on this one, but you will in the next example. So things that can cause a higher effective marginal rate than the regular tax brackets, especially when the client or even an advisor might not expect a higher rate, is things like additional yearly Medicare Part B premium, right? If we have enough ordinary income out there, then our Medicare Part B premiums start to go up, and so we're paying taxes not only on the ordinary income, but also on increased Medicare Part B or Part D premiums. 2, Social Security, taxable Social Security. It's not taxed up until a certain point, but when the provisional income gets to that point, it starts to drag in some of our Social Security and cause it to become taxable. That's another way that we can do it. And I'll point that out here in a second. If we're taking a look at like 2017 or earlier, it's like PEAS reductions, and then long-term capital gains are another one that we'll definitely take a look at today on how that works, and you'll see that gray area that's a little bit wonky as well. So if I've got somebody that has earned income in 2018 expected at $81,000 and they earn an extra $1,000, what we can see down here in the chart is we have our base case, which is the green, $80,000, total tax $6,030, effective rate 7.54%. We added an additional $1,000 to our scenario, which is red, and we're going to pay an additional tax of $120, so 12% on the $1,000. Effective rate is 12% on just the change. This rate, effective rate, is on overall income. So the net additional income to the client in this example with the scenario is $880. So I really wanted to explain that chart. I wanted to jump into the capital gains. I'm going to show you what this looks like as well. Our levers over here are a little bit different. Long-term capital gains, short-term capital gains, and qualified dividends. You'll notice that once we reach a certain point, it jumps up to the 15% level. We just have different levers over here, but it works in the exact same manner. So what we're going to do is I'm going to get rid of my scenario. We're going to go back to data inputs, and we're going to take a look at a case where somebody might have retired. So let's take a look at one where we have IRA distributions of $35,000 and Social Security of $55,000. Now, I had a question the other day, so some of you might be thinking about this, is they said, well, they didn't think that there'd ever be a situation where a couple could have $55,000 worth of Social Security benefits based off of the fact that the highest amount that you have is a certain amount, and when you do the math, it's actually less. But if you do delay it past your full retirement age, you can get to $55,000, $65,000 worth of Social Security income, maybe even a little bit higher. I can't remember the threshold or the stopping point, but that is possible as well. So then we're going to update the scenario, and this is where we see that kind of wonky gray area. I have total income $90,000, total tax $3,234, and effective rate on overall income is 3.59%. You'll notice that it's different up here. We have $35,000 at 22.3% because what you don't see on this chart and what's not represented along this bottom axis is your Social Security because it's not necessarily taxed. It does become taxed at this point in time. Once we have right around $19,000 worth of IRA distributions, it starts to drag in some of our Social Security benefits and make it taxable. So not only, oftentimes when you see like this large spike up here, let's say at 40.8% in this example, and there's another example where it's as high as 50 even under the new rules, what's happening is you're paying taxes on maybe an additional IRA distribution, and you're starting to pay taxes based on that distribution on Social Security. Now, if you don't take that distribution, you might not pay taxes on Social Security, and that's why the effective marginal rate is above the standard tax bracket. It's not like you're paying 40% just on the IRA distribution. It's just the IRA distribution is just causing other income to become taxable. And it's a great way to graphically illustrate what's going on. We see the step ups because it's based off of different brackets, right? 10%, 12%. We see an increase up here to 40% because it's based off of a higher bracket at the 22. Right? This used to get as high as 55% when you had Social Security, other ordinary income, and long-term capital gains. The stopping point now is right around 50, and we'll take a look at an example on that as well. So when I click on the chart, I get my levers over to the left-hand side. Let's take a look at the details. You'll notice that I'm going to take a look at some of the points that we have here. Medicare Part B premiums, 0. Scenario 0. Now you'll notice that my scenario mirrors my base case because I haven't made any changes over here just yet. I go down to things like taxable Social Security, $21,750, right? Our provisional income has gone over to a certain point, so we have $21,750 worth of taxable Social Security. And I'm going to go down to capital gains. We don't have any, so we don't see any changes there as well. So this gray area is solely because of Social Security benefits being pulled into this situation. We get this large spike and it drops off because this is the point where they've taxed as much Social Security benefits as they're possibly going to tax. So the IRS is only going to tax up to 85% of your Social Security benefits. It pops up because of the higher tax bracket. It drops back down because they've taxed as much as they possibly can. So if I were to come in here and say, how much is it going to cost me to take, and this might be a great client service question, is when someone says, hey, I'm going to purchase a new vehicle, or I'm going to remodel my kitchen, or whatever the case may be, I need to take out, or I need to have $10,000 in order to do that. Where could I take that money from? And this is a great way to answer that question. One, if I were to just bump it up incrementally by $1,000 per, you'll see down here the change. $3,000, $4,000. So I'm going to go a little bit faster here. So we need $10,000 worth of income. That's $12,000 worth of additional income out of the IRA. I'm going to pop that up one more. I need about $13,000 worth of additional income out of an IRA. I'm going to just save that real quick. Additional tax is $2,886 at 22.2%. At the end of the year, if the client isn't expecting to pay 22% because we're in the 10% tax bracket, that might come as a shocker because what they don't realize is they're also now having to pay taxes on their Social Security benefits. And that's why we see that increase. We can verify that down here in the details page. When we go to taxable Social Security, it went from $21,725 to $32,775. So the cause of this gray area up top, in this case, is because Social Security is getting pulled in and actually taxed. So let's get rid of this scenario. Let's run over to the inputs, and let's add something like $15,000 worth of long-term capital gains. So similar chart, a little bit different. One, we peak out at 50. It does step down because this is the point where we're still, pushing some of our long-term capital gains into a taxable situation. You see a drop down, and then it pivots right back up. But very similar scenario. One, I have my effective marginal rate. I have $105,000 worth of income. Total tax $47.64 at 4.54%. The next dollar that I take out is going to be taxed at 22.3%. If I were to just simply take $1,000, you'll see that it increases. I'm paying $220 on that $1,000. So net additional income $778. I come down here, and what we can see is your taxable Social Security. Again, that's increasing. We'll come down to long-term capital gains. No increase there. So if we are looking for a certain amount of money to come out, one, this is great for planning purposes. This client knows that what they can do, what you know is you could take up to roughly $10,000 out of the IRA before we see this spike up to 50. So it takes $10,000 out, $2,220, 22.2%. So net income is $7,780. You'll notice here's what happens if I take another one. It pops up, and it starts to change my effective rate. If I do one more, you'll see how it starts to increase because now I'm paying 50 cents on the dollar taxes. I'm paying taxes on the IRA distribution. I'm pulling in more Social Security to become taxed. And this is the point where I'm causing long-term capital gains to become taxable. And again, I can come down here and I can see Medicare Part B, nothing. Taxable Social Security, we see an increase. Come down to long-term capital gains, 15%. Before the scenario, we were paying zero because we hit that peak. Now we're paying taxes on $2,875 worth of long-term capital gains. And that's what's happening right here. Again, it drops back down because Social Security at this point has been taxed completely. But as I start to take more, I'm still pulling in some of my long-term capital gains and pushing it into the 15% bracket. If you take a look at the long-term capital gains chart, same thing here. We see an uptick. It drops back down. For all of the same reasons. If I were to take more long-term capital gains out, that can cause some of my Social Security to become taxed. You'll notice that long-term capital gains are not taxed in the same manner, so our peak is different when we start to take out long-term capital gains here. Our troughs are where it falls off at 15%, and before that 10.3 is different as well. But still, there's a correlation between long-term capital gains and ordinary income, just so that you can see both of the charts. Now, as advisors want to use this tool to develop relationships with CPAs or EAs, we have two ways to print. One, I'm going to go to the print screen here. And you can do this on any website. The big difference is the disclosures, and we were asked about those before. Sometimes when you're dealing with a CPA or an EA, they might want to see all of the data points down below. So we give you the graph of everything here, and you'll notice that you can see the line moving up and down on the page. You can see all of the income inputs and all of the details down below. And right below that, it's disclosures, our disclosure along with custom disclosure. Custom disclosure is the one that you can input into the software. So this is one report that you can use. I do have advisors that might use this with their clients as well. It really just depends on what you're trying to accomplish. Outside of that, I can click on PDF and generate an actual report for the client. I'm going to show you what that looks like here in a second as it generates. If you do need help with anything, and you want us to take a look at the outputs because you have some questions, click to help me, right? Are you sure? I click yes. I can call this number, let them know exactly who I am, and what they can do is they'll look you up in our system. They'll be able to push a button. It de-identifies all of your information, but it allows it to take a look at the output for that client. And that way we can better help you a little bit quicker. So it's a great tool for our support team to be able to help you and have a conversation with you moving forward. Here's what that report looks like. I just have my logo, but your logo can go on the front. Prepared by, prepared for. We go into the assumptions. Notice it looks very familiar with how we started off our webinar, which is going into the tax year, standard deductions, personal exemptions, and additional standard deductions over 65, breaks down the income tax brackets, capital gains, and Medicare monthly premiums, and really talks about what this report incorporates. You'll notice this one incorporates the new tax law, so we do talk about that in the report details up top. When we come down, we can have a federal comparison between our base case and the increase so that they can see the differences. We will be able to see our tax map and have the same conversation here. Graph looks a little bit different, but we can see that the top marginal rate here is 50% the peak, right? My current rate is 22.25, and ordinary income, next marginal, I can take out another $10,500 before I see this jump up, right? And then the next marginal rate is 28.25, so you'll notice like midway between, you'll hit like a stair step that you don't see on the graph because it's small. Capital gains, same thing. Top marginal, current, next marginal rate, next how much I can take out before I hit the next marginal rate, and then the actual next marginal rate. When we come down, we get some details on the base case. We can break this down for the scenario as well and get some of the details for the scenario, long-term Social Security, what inputs we actually used. And then this is probably one of the most important pages, whether you're dealing with your current clients and you want to do a little bit more business with them, or prospective clients, is tools for tax control. Talking about taxable accounts, traditional or rollover individual retirement accounts, Roth IRA accounts, product level taxation, the importance of a plan. This is where a lot of advisors might start to set up a second appointment with their clients and move on to be making these folks clients that you work with on a regular basis. And then we have our disclosures along with your custom disclosures on the last page. And then there's an appendix, so the data inputs show up here as well on the appendix page. Now, I did have one question about AMT before. If we go down to the details, I didn't point that out before. So net AMT, subject to AMT, so we take that into consideration on the software as well. So it just calculates in it, but you can take a look at what that might be down here in the details. So I'm just going to review some of the questions here real quick. So the person asking about the bundle discount, you can give our 877-844-7213 a call, and you can ask for Dan Gaydos, Gaydos. If you do want to send over your details, I'd be more than happy to provide you with a coupon code for that discount. For the person that asked for the sample information, we'll make sure that we can get that over to you as well. And hopefully the person that was asking about explaining the chart in the gray area, if we have any additional questions, that would be great to hear from you as well. Any other questions that you might have? So I'm going to pop over and talk about a few things, but if you type something in, I'll come back and we'll take a look at it. If no questions are in by the time I get done, then we'll just call it a day. So back here to kind of the blog, if you go to covisum.com, COVISUM, if you come down to tax clarity, click get a 10-day free trial, you can set up a trial, have access to everything that we had talked about today outside of certain marketing resources, access to our full support team. You don't have to put in a credit card, and you'll be able to use the software and interact with us to make sure that we're right for you and your business. And I think that you'll be pleasantly surprised that our support staff is second to none out there. But I do have some questions that are coming in here. Hold on here. So the question is do we see a use for younger clients? If you're trying to plan potentially for the future or get an idea of things that might impact them, yes, you can look into the future a little bit using this tool by selecting a tax year a little bit further into the future. Depending on how young they are, you could use this tool just to get an idea of what their tax situation might be if they're current clients for you. So that might be helpful as well. If they're still working and their primary source is earned income, we did one of those examples before where you can actually see what that tax looks like, but you don't see a lot of the wonky stuff that you do see in retirement. So that might be a use for it, depending on what you're doing with your clients. So they want an example about, gosh, we got a lot in here. That's a good thing. So I don't know that I'm going to be able to get to all of these questions, but I will be able to get responses to some of these questions as before the end of the day. Okay. So we're about 7 minutes further into the presentation, I do have quite a few requests about having specific examples out for you, PowerPoint presentation slides, and so forth. Um, what I'll wind up doing is just contacting you or sending you examples of how certain things work, and that might be a little bit more effective. Because if I run through all of these examples, we're going to be here for quite a bit of time, but I'll make sure that we get all of that information over to you as well. Um, so I do appreciate your time today. Have a great and productive rest of the week. And for all of you guys that asked for specifics, rest assured we'll get those put together to you and emailed over based on the email address that you used to sign up for the webinar. If you do have a different email address that you'd like us to send you information on, please just take the time to put in that email address, and we'll get your additional information sent over to you. So I'll actually leave this up for another 2 minutes in case you have an email address or additional information you want to provide us. So thanks a lot, and have a great rest of the week. Thanks.